record this. Okay. Oh, what is this now? All right, I'm not sure what's going on here, but just a second, I'm gonna try to check it out. What exactly is the problem? Okay. All right, can you guys see? Can you guys see anything?
Yes.
You can see everything, right, on the screen?
Yes.
Okay, all right, good. I'm the one who can't see it yet. Not saying anything that I'm sharing at all. So, and okay, okay, share again. Presentation. Yeah. Okay, we're good. I was here. All right. So approximating a trend line. What are they approximating the trend line? The determining the exact value of the trend line may not always be necessary in some cases. And approximately trend line, it's sufficient for agreeing the general behavior of the data. If the data set is the liner, the trend liner, it's simply a line running through each point, right? So if you look at it, X and Y, it's 1, 2, come back to 2, 3, 3 changes again, come back to 3, 6, 6 changes again, come to 4 to 8, 5 to 10, 6 to 12. So it has a sufficient long graining the general behavior of the data. If the data set the line, the linear, the trend line, it's simply a line running through each point. So as you've seen on let's say this point, it's simply running from this point to another point, this point, go back to this point, to upper point, like that. So once you identify the trend, it doesn't move, it doesn't just shift from the trend that you are actually following until it shows you a certain signal to say that this is the end of the trend and now it's forming a different trend. There is a simple strategy for approximately to trend line. Draw a line that is situated at a minimum, a distance from each point, which trying to pass through as many as possible, so that the number of the point falling over or above and below the lines is roughly equal. All right, I'm not sure if you are understanding the briefing of it. Maybe you're going to understand when you get to the technical of it on the chart. So what is the purpose of drawing the trend line? The purpose of drawing the trend line is to skating whether the current will continue in the same direction or if the trend can change, right? The purpose of drawing those lines now is to understand whether it will continue the trend, the same trend, or anytime soon it will change that type of a trend direction. Most traders make the mistake that broken trend line means a change of the trade. So remember, if you're trying to draw the line from the lower point to the higher point, but it's not getting to the higher point, it turns all the way down and then it comes back all the way again. It means the line itself, it has broken. It's no longer a trend. There's a certain point that it break, then they change the trend. So you don't need to start from the end point. You need to move to where it breaks and where it turns all the way down and started from that side, drawing the line to upper side. So that's what a lot of people actually miss when they are drawing to see the end, the way they can enter the trade, the entry point, and the take profit, because they are concentrating on the lower point that they have on a chart, forgetting that the same trade has ended some way, turned and form a different trade, right? So there's a two different endpoints. When we get to the chart, definitely I will show you where to, to see where the proper trend line it can be able to be used. Okay, most traders make the mistake that broken trend line means a change of the trend. This is partially true. The important point to note here is that a broken trend line could simply mean a deeper retracement or a pullback to the trade, or it could indeed signal a change of the trade, right? Three things that we're seeing there. It might be a pullback, it might be retracement, it might be the change of the trade. Now, if we are putting small amount of money, 500 Rand or anything less than $500, when this thing happen of retracement and the pullback, we tend to lose a lot of money because the amount of money that we have, it's small. But the take profit where we put it a little bit higher, and then it broke the trend, which is the end of the trend, or maybe it's a retracing, or maybe it's doing the pullback so that it continues to the point where you are. So when you see that pullback, and if you are actually in profit, it's better close your trade on the pullback and then wait to retrace, then give you a proper signal, a candlestick that identifies that this is where the direction is going, then enter again in the market, and then jump again in the market. Any questions so far? So far, so good? All right, looks like so far, so good. So far, so good. Okay, let me mute also Ritepile. Welcome, Ritepile. Welcome. All right, this is where a trend line can help by understanding the trends. You can easily take the help of the trend line and figure it out what price are doing, what price exactly is doing, and the trend line can be traded in two ways. You can either trade the break of the trend line, or you can wait to the retracement to be completed and enter the direction of the trend. So this is what I was explaining, that you can either, close your trade on the break of your trend line. Once it's breaking, you close it. Or you can enter your trade on that retracement point and close it when it's now forming a new trade. Or you can enter your trade when the retracement has finished and it's starting to form a new trade. Then you enter properly and then you go. Some of the people, they make a mistake. They will leave the trade from the beginning of the trade. When the trade starts retracement, they still leave it there. The whole money that they've been making with the trade, it all come back, starting again on a zero, right? If it's still gonna continue with a pullback, they actually take them on a loss. That's where the emotions come and start playing with us now. Because we've been making a profit with this trade. Out of the blues, this trade, it changes. Now the whole profit is gone. And now we're sitting on a loss, right? That's the reason why a lot of people, they play with their emotions, play with them. They start jumping in the market, close the trade to say that, no, man, you know what? I'm closing this trade. I don't want to trade this trade anymore. I'm going to look for a different trade, or I'm going to look for a different opportunity, for example, But when you are closing a trade on a loss, you lose money. Even though you close the trade maybe with a small loss or not a loss again, you lose time. The time that you enter the trade to all the way up at that was money that was collected. You could have collected that profit and move on and trade a little bit of retracement and then catch it from the day end, and you go up with it or you go down with it. The reason why I'm saying this, because we do not have money like other investors that they have. We have a small amount of money. We want to build that amount of money. if I had a lot of money, I could have leave it on a break, to do the tracement. I'm still gonna catch it on top because I do have enough money to hold it. It's not gonna play with my feelings. If I'm having a loss, if I have 100,000 rand, I'm having a loss of whatever, 5,000, 10,000 when it's a retracement, I'm not gonna shake, I'll be fine. I'll be like, no, I still have 90,000 to hold the trade. So the trend is still the same, it will go, I will make a profit. And that is why those who have a lot of money in an account, they do have opportunity of making so much money than us who don't have enough money in their account. You know, we have a limit amount of opportunity to make money. That is why we need to understand this type of a strategy so that we can keep on collecting small amount of money bit by bit, growing the account until our account become bigger. So you can either trade the break of the trend line, or you can wait for the retracement to be completed and enter in the direction of the trade. So these trend line can help you to enter the trade in a direction of the trend, or trade a counter trade move of the retracement when it's retracement, when it's retracing. The key point to success with the trend line trading is to knowing how to plot the trend line. So the key point is knowing and understanding how you can plot that trend line. Ladies and gentlemen, I do have 10 minutes left on my Zoom. Doesn't mean it's finished. We're gonna go on a second session whereby we're gonna, illustrate on the chart. So yeah, welcome, Ms. Tabelang Ratsiu. You're most welcome for tuning in. All right, so after 10 minutes, it's gonna cut, but please, let's rejoin again so that we go through on the chart now and see this trend line, how we, draw the lines. Remember, the most important part is to understand where to draw these lines so that we should have a clear understanding where exactly we can be able, to actually, enter our trade, to take our profit, or to take to put our stop loss. So what are the importance of the trend line, right? The trend line are important as it can give you the larger contents of the market. So it actually tells you where exactly the market is going, where you can enter, where you can close. To put in a simpler terms, a trend line can tell you whether the current trend has ended. There you, and then you can look at a larger view and understanding if this change of the trend is temporary or if the new trend has been established. This knowledge comes from the firstly understanding what a trend trading is. You can refer to some of the articles on internet if you want to check it out, the trend trading. But again, I'm gonna in future I'll prepare the presentation especially for a trend trading, right? To get to know all about the trend trading, then you can apply that knowledge to the concept of the trend line and actually start, trading on yourself. All right, okay, here looks like I can say, but hey, the letters are very small. So let me just try to increase them. Okay. Yeah, to be 20. All right, much better. All right, how to draw. So how to draw, we're getting to the end of practical. Then we at the end of theory, then we get to the practical. How to draw a trend line for upper trend and a downtrend. So assuming that you have read the previous all the articles on internet, we already know that in an upper trend, a price makes a higher highs and a higher lows. Similar in a downtrend, the price will make the lower highs and the lower lows. So understanding the upper trend, it's a higher highs and a higher lows. In a lower trend, in a downtrend, it's a lower lows and lower and high lows. So to those that have been, tuning in on this Zoom, we talked about previous weeks about the higher highs and the lower lows. If you requested, we can always come back with that presentation and repeat again. In upper trend, you would be focused on the higher lower, then connecting these higher lowers, you can draw the resigning trend line when the rising a trend line is bridged, you can expect it to see the retracement or a change in a trend. In a downtrend, vice versa, your focus would be on the lower highs, connecting the subsequent lower highs. You would draw a falling trend line. When this falling trend line is bridged, you will then know that the price are changing the trend or simply making a retracement on the market. So this is just a simple example. You see this one, upper trend. Now, if you entered here, look at the candlestick that identifies now that this is now beginning of the trade, of the higher trade, right? Start buying all the way. It wanted to retrace here, but it fails. But look at that candlestick. You see that candlestick, it pulls all the data from the down and leave a little bit of data on top. But that data that it left, it's a buy data. It's not a sell data, it's a buy data. That is why the trend continues, all the way continues until it gets somewhere around here. Now you can see this type of candlestick. Between this black one, there's this one. Goes all the way up and pulls all the way down. What does it mean? It actually means that it actually exhausted. This trend has been exhausted. Now it's starting to jump on a lower trend. Exhausting of the trend is now coming on a a lower trend all the way. So now, if you had so much money, you could have buy here. When it's turning here, you couldn't have a problem. You could have leave it because it comes all the way retracing. Look at the part that is plotting a rising trend line. The retracing here has been playing around at the same position. What exactly is looking for? To go again to the upper, to form again another trend and go all the way up. Now, if you had a big money, you leave it, play whatever it does, goes all the way up. If you and me, like how we deposit, like you and me, you enter a trade here. Once you're seeing that the trade is starting to change, you close your trade. Then you enter a sell trade. When it's starting playing around at the same position, retesting over and over again, you close your sell trade. You wait for the confirmation of the buyer trade. That's where you're gonna make money, because you can make money here, you make money there, and then you make money when it's going up. And here's the advantage of doing that. You are increasing your account by closing this trade, still increasing account by closing here, still increasing account by going all the way up. All right, ladies and gentlemen, the theo end here. Any questions so far for the theory before we jump in a chart? We only have 10 more minutes for our session to finish. Don't forget, once it cuts, let's rejoin again so that we can finish up with our demonstrating the trade. Any questions so far? So far, questions? All right, no problem. Maximize this key. All right, so here's the chart, ladies and gentlemen. This is the chart of United States dollar versus Canadian dollar, right? Now, when you look at these are called time frame. A lot of people, maybe you guys, you know it. Last week, we were talking about the time frame as well, to understand how it works and how we can, make sure that we take advantage of it in a market. This is a minute time frame. A minute time frame, it tells you that, gives you the collection of the data in a minute. After a minute, they will form a new candlestick. So there's guys that they will tell you that I trade a minute strategy, right? You can enter here, look at it here. This is a minute strategy that these people, they trade. I don't really like it because it actually wants you to put your, all your attention on the screen all the time. look at it. After a minute, there's another form forming. But if you do have that time of watching it all the time, then you do it. You sell here all the way, it comes here, you close your trade. You buy, here it is, another buy, it's starting. You know, it goes all the way, it will go all the way to this line, and then you close the trade again. You see where exactly it's gonna form. You're collecting money on it. You are actually collecting money on it. All right. So this is 5 minutes time frame. I don't really like it as well because it's too small. I know not every 5 minutes you have to be in a market and watching. Every 5 minutes you're watching in a market. That's not good. It will build that anxiety to say, hey, look at my trade. Now my trade is on a loss. Now my trade is going on a profit. No. So each and every candlestick formed after 5 minutes. After 5 minutes, this is 15 minutes. I pretty much like 15 minutes because I mean, I can, you know, hold my trade for a little bit, 15 minutes, but I do prefer 15 minutes or 30 minutes to an hour, because now the whole candlestick is a 30 minutes. You can actually, you know, trade it, you know, and wait for the whole candlestick to drop. When it form another one, it's up to you what you're gonna do. If it still continue with it, you know, you continue with the trade. All right. So this is 1 hour, this is 4 hour, this is daily, weekly, month. Okay.